And I see our
Hi,
team is.
Carolyn. How's it going today?
Hey, how's it going, Aaron?
Good.
Wonderful. We are welcoming our attendees, and we were just getting started. So whenever you are, I think we can get started.
I am ready when you are, Carolyn. I'm real excited to be here again on another Moomoo webinar. Obviously, talking about technical analysis today.
Yes, we have encouraged our attendees to feel free to start using our Q&A function and tell us what questions you've always had when it comes to technical analysis. So feel free, please do engage. And let's dive right into today's webinar. So welcome back, everybody. Today's webinar's topic is about how to buy and sell stocks using technical analysis. And I think this is a topic we have heard over and over from many customers as well as friends and retail traders. Technical analysis can tell us more about it. So with that in mind, we made sure we partner with Aaron Bry again to bring you this quite well-crafted webinar that we're pretty excited about. As
Yeah.
always, risk disclosure. So today's webinar is really for education purposes only, and it's not giving any investment advice. So please just keep this in mind as we go through the content. Aaron, a little bit about ourselves.
Yeah, so my name is Aaron. Like you said, I'm a trader and producer here at Benzinga. Benzinga, for those of you that don't know, we are a financial news outlet, one of the fastest growing in the United States, actually. And if you trade stocks anywhere, like on an app like Moomoo, you may see some of our news coming through on your brokerage. And so, yeah, I do everything here from help out on our live streams. You can catch us on YouTube, help out on our socials, so Twitter, TikTok, you name it. And then, yeah, I'm doing some live trading, write some articles. And I've been trading for about I've been investing for about 10 years, trading more closer to around 3.
Great. Thank you, Aaron. Really excited to have you be on today's webinar and share with us some of those techniques and the knowledge that you have acquired over the years as a trader. As for myself, I run marketing at Moomoo, and my background has been pretty well related to financial products, including brands like Visa and now Moomoo. But also on the side, I have been a investor myself. I do a little bit more on the fundamentals and value investing, but increasingly, I am noticing when the market is becoming more volatile, that is there. The market is creating opportunities for investors who are proactive, and that is where I am. I'm a little bit of a novice, but very eager and have learned a ton working with experts and our experts internally as well as externally. So very excited about presenting the content today that my team has passionately put together.
Yeah, I'm excited, Carolyn. And like you said, I think we're going to get into kind of the difference of, you use technical analysis like what we're going to talk about today more in those short-term trades, right? I mentioned I've been investing, buying stocks for about 10 years, but there's a difference between just buying stocks and holding them, long-term investing, and then using charts, using technical analysis to make some more of those short-term trades.
Yeah, thank you for calling that out because as the definition here shows, we always talk about technical analysis if when it feels like complicated and abstract, it's somewhat fundamentally almost a mathematical practice, right? It's looking at some input of data points and trying to forecast what the price might become. But that application of technical analysis is indeed a lot more relevant for short-term traders. So that we want to make sure we help you guys understand that premise up front.
Yeah, and I
So
think it's kind of funny because some short-term traders, they don't even use fundamentals at all, Carolyn. I've traded with some people who are like, oh, I'm buying some shares of let's say they're buying Apple, and they're saying, oh, I like the way the chart's setting up, and say it was a smaller company that I didn't know, and I'd say, what does that company even do? They'll say, It doesn't matter. I don't care. The chart looks good. They're just looking at the charts. They don't care about the fundamentals. So for short-term trading is definitely where you want to utilize this, the technical analysis.
That makes a lot of sense. And you mentioned about charts. So first, I think we should talk about charts as we are diving into technical analysis. So I heard, Aaron, from our internal data, what we have seen is bar charts and candlesticks are some of the most widely used charts in technical analysis. But there are more kinds of charts to begin with. On the left-hand side, we kind of cataloged most of these different charts. How do you, for someone who's maybe new to technical analysis, how should I think about charts?
Yeah, so like you said, Carolyn, there's a lot of different types of stock charts out there. And really, the candle and the bar charts, those are the most popular. But on the linear charts, you'll be able to kind of visualize some of those. And we'll see, because those look a lot more similar to what we'll see with some of the moving averages we talk about later. But really, you should learn all these different types. And right, like the hollow chart is the same as a candlestick, but the bars are not colored in. So we'll talk about some of those small differences, and you really just want to kind of learn about all these different types of charts and see what works best for you, right? We all learn differently. We all visualize things differently. So it just comes down to which one of these types of charts allows you to visualize the chart in the best way.
Yeah, I did notice though that Moomoo is more, if anything, more like a pro type of trading tool. So I just want to quickly call out, if you guys in the audience, you happen to have the Moomoo app, I encourage you to pull it out and kind of use it as we go through the content, because at the default in Moomoo, you'll see these candlestick charts. And if you do prefer different kinds of charts, the two screenshots here show you where you can access them, and you can toggle between different kinds of charts. I think, Aaron, you had mentioned besides visually different, the bar and the candlestick do have some small differences too. So I think we can dive into that maybe just a little bit.
Yeah, so here on the bar chart, Carolyn, you can see there's four main different indicators. You can see on the bar chart, you can see where the asset or stock's high of the day was, where the close it was, where the open was, and then where the low of the day was. And candlesticks here on the right side are similar. They have pretty much the same information. It's just, like I said, a different visualization of it. So on the candlesticks, you can see where the thick part of the candle is, where that's filled in. That's your open and close. And then the wicks, the skinny part that come either down or up, is where that stock got to either higher or lower intraday. So if you see a candlestick with a big wick, right, so the tall skinny part's going way up, but then the actual candle, the filled in part, is a lot lower, that means that the stock got a lot higher in the day, but then ended up closing lower. So it still shows you, right, the stock may have closed at $80, but it got all the way to 85, and you can see that by the little wick. So the bar chart, some people prefer that just because you don't have to then see, like, okay, where'd the wick go, where'd the candle go? But I always get that question, Carolyn, especially with new traders. They say, what do these little skinny sticks on the candle mean? That's just where the stock got to intraday, either higher or lower in between the open and close. And then once the market closes that day, that candle is filled in. And we should also mention that the candles themselves, you can look at different candles, right? You can look at daily candles, which is what I mainly look at, but you can also look at weekly candles or monthly candles, and same thing, see where a stock got from the wick in that month, but then where it closed at ultimately.
Yeah, thank you for walking us through that. And as just kind of to leverage what you have just said, if we look at the candlestick over to the right hand side, there is a very skinny strip of red color with a really long wick. That is a day when the price had a bigger variation, but it opened and closed very close to each other. This is probably a day doing day trading would give you a lot of opportunities versus another day with that green bar where the wick doesn't really exceed as much of that bar itself.
Yep, exactly.
Or if you predicted that rise
Yeah.
towards the market close. It is not easy, but that's why we're learning, and we're going to help you guys just really kind of walk away from this webinar having a lot more understanding of technical analysis. So one of the things that I was reviewing the content with my team, and we all kind of thought, if you all walk out of this webinar and don't remember too much, we'd like you to really pay attention to this one slide. The reason is this one slide really helps you to kind of wrap your head around, technical analysis, VWAP, MACD, price charts. It could be very overwhelming. They have some logical relationships, and they primarily are going to be 1, 2, 3 kinds. We're going to dive into the details, but this really gives you a quick sort of map about what's the relationship between these different types of technical analysis. Not types, these different inputs or different aspects with regards to technical analysis. Price patterns is where we're going to begin. Volume is a secondary supplementary data point that helps you with your price prediction. Technical indicators helps you when the market has different conditions, and it also addresses some of the missing pieces of information with regards to using just the price patterns themselves to try to help you with the price forecasting. So this sounds like a lot, but I want to put that right up front, so you have something to kind of think about. With that said, let's maybe dive into the first part.
Let's do it.
What is price patterns? Yeah, price patterns is really about, as the price goes on, sometimes it's up, sometimes it's down. They themselves form a pattern. As most of the publicly listed companies, the stock would be listed for a very long period of time. And so to Aaron's point earlier, short-term traders have found that the price patterns themselves is sort of, they are reflecting the supply and demand in the market. So they primarily look at this, and they understand that this is a way for them to identify whether the price is continuing to go up, or the price may have a change in direction. And the technical terms for those are either there's a reversal, which means whatever the upward or downward trend will change, or if the price is going to continue where it is. So that provides us signals, either bullish or bearish. The price patterns, so there are actually roughly 2 kinds, as we said, reversal and continuation. I'd love to invite Aaron to help us to maybe unpack these 5 reversal patterns that we have here. Just briefly, Aaron, I hear this a lot too, triple tops, double bottoms.
Yeah, so like you said, Carolyn, right? 2 types of patterns, either one that will indicate a reversal, that either a stock that's in a downtrend will then be coming up, or vice versa, a stock that's been going up will be coming down, or a continuation, something that will show you, okay, this stock's been moving higher. Here's why the chart's saying it could move higher, or vice versa. This stock's been in a downtrend. Here's a pattern showing that it could continue moving lower. So the head and shoulders pattern is the one that you can see here on the right side. You can check out these little blue bars or blue lines that track the head and shoulders on the left side of that chart on the right side of the screen. Basically, a head and shoulders is when you have 2 tops with one top in the middle that is even higher, right? So it kind of looks like your head, or your shoulder, head, and then shoulder. So this is oftentimes one of the people call the most important pattern, because it's seen as bearish. And we can talk more about how to identify these and how to even maybe trade some of these patterns, Carolyn, as well.
Wonderful. And I want to call attention to our audience as well. There'll be a little small quiz very soon. So memorize these patterns. We're going to quiz you real quick about what pattern is a rising pattern, what pattern is a down.
And just real quick, so pattern. I can go through these 5 just real quick. So the triple tops and double tops and bottoms are very similar. It's just when a stock hits the same part on the chart multiple times, right? So if this stock we're looking at, Apple right here, gets up to 175 3 times, and each time it hits 175 and fails to break it, then on that third time, that would be the triple top. And it's the same for bottoms, but vice versa. Say it hits 150 on the downside 3 times. That third time it hits 150, that's your triple bottom, and it's seen as a reversal. Now it's coming back up. Or if it's a top, coming back down. Spike or V tops and bottoms are what we saw during the COVID-19 markets, right? We had that huge market crash and almost immediately reversed and came back up. So typically those have a catalyst, right? The catalyst there was, well, first the COVID driving the markets down, but then once the Fed started putting some money out there, lowering interest rates, started going up. So head and shoulders is bearish. Triple tops are bearish, but the bottoms are bullish. So if it's a triple bottom, that's bullish. If it's a double bottom, it's bullish. If it's a double top, it's bearish. Spike V tops are bearish, bottoms are bullish. And then a saucer pattern can be, it's typically bullish. A saucer pattern is more of just a gradual rounding bottom. So if you ever see a stock chart that, it's been going down for a while and all of a sudden it starts curving at the bottom and it starts kind of leveling out and then it starts curving back up. So we might pull up some more examples later, Carolyn.
Yeah, thank you for that, Aaron. And one of the things I noticed is it's almost kind of counterintuitive, but in a very simplistic way, almost every time there is a bottom, that actually is a bullish sign. So for instance, triple bottom, double bottom, or spike bottom. Is that correct?
Yeah, it's correct. And you can just think because that bottom is saying that's where we're bottoming out. That's where we're bouncing from. So you want to buy the stocks on the bottoms. You want to buy the stocks when we're about to bounce, and then vice versa for tops. Anytime you hear someone talking about a top, that's bearish because guess what a top is? It means it's not going higher. It means it's coming back down. So you don't want to buy at the tops. You want to sell when the patterns are looking bearish. You want to buy when they're looking to set up bullish.
Right. Let me, I mentioned about the quiz. I'm going to launch the poll and just to see if our folks have actually gotten this in the idea. We know now that we have heard different patterns. Let's see how I feel like back to the school and I was the teacher. This feels great.
I know, but it won't let me vote, Carolyn. I want to get some bonus points for guessing the correct answer, but it won't let me vote.
Right, and I should confirm with my team, but I, as usual, you all who have attended our previous webinars, when you participate in the poll, we will be sending you an appreciation prize of one of our Moomoo merchandise. Please cast your vote. It's your chance to also just to test your knowledge and see how well we have understood the content so far. I wonder if we should make it work like some of the tests where if you make it wrong, you get some points deducted.
Yeah, it's like the SAT.
And reminds me of GMAT. Some of those tests, they're pretty scary. In stock trading, though, nobody will grade your homework, but your hard-earned money will. So it is quite important to really memorize and practice. Actually, on that note, obviously I'm here shamelessly plugging the product, but one thing I really love, I did not know, but I was really blown away, is within this Moomoo app, we actually automatically detect these patterns for the Moomoo users. So if you have the Moomoo app, I'd love for you all to go ahead and open it and look for the very top mega menu. And I want you to search for an icon that's called Explore. That should be next to Watch List and Markets. So if you hit on Explore and you just scroll down Explore, you will see at the very bottom of that landing page, you'll see candle pattern. We actually have summarized head and shoulders, triple bottom, etc. These different patterns in the app itself. Because one of the things I think we have heard from folks is it's actually really difficult to do pattern detection. So this is somewhat of a shortcut to further stock analysis. Whoever has found it, go ahead and let us know. If you have trouble finding it, also do let us know. We can maybe show you where this lives. All right, I'll end the poll. Professor Aaron, what do you think? What are the right answers?
I'm guessing the head and shoulders top. I can't see the answers anyway. Oh, here we go. Yep, head and shoulder top. I'm going with the crowd, 67%.
Yeah. So for those who did pick the bottom, I want to remind everybody again, when you see bottom on the candle pattern, that actually is a bullish sign. So hopefully you'll remember that next time. All right, cool. Let's come back to our next slide. We have mentioned there are two kinds of patterns. It's either reversal or continuation. So for continuation, we may want to look at some other patterns. And there's some pro tips when it comes to reversal patterns. These are, quite a bit to read. We will be sharing those slides later.
So yeah, the key here is just to remember that with the reversal patterns, right? You're looking for a break of the trend. You're looking for a stock that's either been going up and now here's why it's coming down, or it's been going down and here's why it's coming up. And like you said, Carolyn, we'll be putting these slides out, so all this information will be available to those watching.
Mm-hmm. Great, sounds good. Cool. So let's look at the continuation pattern. And what does it mean by continuation pattern, by the way, Aaron?
So it's kind of in the name, Carolyn, right? It's continuing the trend that we've already been seeing on the stock. There are certain times charts will set up with patterns that show us, hey, here's why this stock that's been in an uptrend looks like it's going to continue in an uptrend. Right, for example, here you have the rectangle occurs when the price is moving between the horizontal support and resistance levels. And then it can indicate a further breakout from that level. And the same thing with a stock that's in a downtrend, right? Sometimes a stock's in a downtrend, it'll start moving sideways and people think, oh, here we go. It's got to start coming back up, right? Well, not all the time. Sometimes there are clues that show us that this could be still part of that continuation in the downtrend.
Mm-hmm. Yeah. This is sometimes, I think this is sometimes some of the, just traders will find hard to trade, but other or more advanced traders will really find opportunities. And we'll kind of talk about some of the indicators as well to kind of manage these situations. Great. Let's go to our next one. It's when it comes to analyzing, I think we wanted to remind everybody, it is hard even if you are experienced. That goes almost without saying. So don't feel really frustrated that we're not getting it right every time. And one other thing we wanted you guys to all know is, if there could be a magic wand that somebody could crunch the numbers for us, and we know that price pattern is an indication for where the price might go, wouldn't it be nice that some big data could crunch the number for us and at least give us some sort of reference point? And this is what we wanted you all to know. It actually exists. It's called similar charts within Moomoo. Whenever you see a stock ticker and you are browsing the details, there is a place that you can find within the detailed quote page to access this feature. So if you are on your app, I'd love for you to click on any stock ticker. Next to the candlestick chart, to the top right, there is a tiny little clock looking thing. It's actually it's sort of a gear. Once you open that up, it'll open up a hidden menu, and you can click on that feature called similar chart. So this is just another thing we want to call out, that it does feel hard to even use price patterns and know all the math. It still is hard, and this is just an additional tool that may help you. Volume. How do we think about volume, Aaron? We kind of hinted that volume is a secondary input or a secondary information.
Yeah, so volume is very important, Carolyn, because it shows us how much how many shares are being traded, right? How many shares are being bought and sold? And what's even more important than that, because with the volume alone, right, you can tell, okay, say more people today are buying a certain stock. Say it's Tesla. Say Tesla's average volume is 100 million. Say today the volume was 150 million. That's showing that there were 50 more million shares bought and sold than were typical, which is important. But what's even more important, Carolyn, which we're going to talk about, is being able to see when that volume was coming in. What price was this volume coming in at? Were more buyers coming in, as the stock was dropping? Or were buyers coming in as the stock was coming up, showing that there was a lot of FOMO buying? And we'll talk about this, but very important to understand how volume works in your trading.
Yeah. So let's take a look at volume. There are two kinds that of information that we have just kind of simplified here for you all to think about. One is the continuation of present trend confirmed with the input of volume. The right-hand side is about price pattern maybe suggesting a rise, but the volume is telling you otherwise.
Yeah, and look, you can see right here on the left side on this continuation, and it's funny. I was talking about Tesla as my example too, and we're using Tesla here too. But as the stock is going up, the volume is actually increasing. That's because more people are coming in, both to buy and sell the stock, right? Typical supply and demand teaches us that as the price increases, you'll have more sellers and less buyers. But what happens with stocks is as the price increases, more and more people say, oh, hey, that's interesting. The stock's doing so well. I want to buy this stock. So you actually have some of that reverse there. And yeah. Oh, looks like we need to go get back to the slides. All good.
Yeah, apologies. My computer defunct. Yeah, this is super helpful because just by looking at these two charts, I think it helps a trader to really think about these skinny bars. They seem to be rising. What kind of action should I be taking?
Right, and you can see. So okay, yeah. We should continue though, because I guess we're. I didn't realize that we're already 27 minutes in.
We are. I know when the time is well spent, time goes so fast.
Exactly.
So let's go into technical indicators. I know, Aaron, we have just about maybe another, I think, 10, 15 minutes. Is that right?
Yeah.
Or 10 minutes?
About 10 minutes. So technical indicators, there's a lot out there, and we'll discuss the different ones, kind of the top ones to use. I saw, Carolyn, someone actually in the chat asked at the beginning, if you had to pick only two indicators, it was Julie K said, if you can name the two most important factors that decides buy or sell, asking about, is it RSI, volume, Bollinger Bands? And we'll talk about the differences between them. But my answer to that question is everyone's a little different, and you got to find what works what works best for you. Some people like using the RSI and some moving averages, and that's it. Some people say, to hell with the RSI, I want to use VWAP, and it's really up to you. So it's just about finding what works best for you.
So let's take a look. We have today, we're going to share with you guys 4 groups of technical indicators. And to Aaron's point, first understand them and later practice, and maybe you end up just using a couple, and that is totally okay. So the first type that we have summarized for folks is moving average. Moving average is definitely one of the most commonly used technical indicators. And this is available to the right-hand side. You can see when you turn your phone around, when you're using Moomoo, you'll see these menus to the right-hand side. And whichever one you click will show you these lines. So like in this screenshot, we're showing several different moving averages. That is the MA that is clicked. When you click on Bollinger or EMA, they will then show different indicators. I'll give Aaron the time to help us understand how to think about moving averages.
Yeah, so really the key here with moving averages is most people use a combination of moving averages, a short-term one and a long-term one. So typically you'll see people, maybe they use a 10-day and a 60-day, or a 10-day and a 50-day moving average. So that's what you're looking for with the moving averages, is you want to be able to compare and contrast the long-term trends, the long-term moving average with the short term. So if the short term crosses the long term on the upside, it's saying, hey, recently more people have been buying this stock than typical, showing that it's a bullish sign, and vice versa. That if the short term, whatever the shorter time frame moving average that you have on dips below the long term average, that's showing that, hey, we could be in some troubled waters here in the short term. So always important to remember to kind of have a long-term moving average and a short term, and whichever ones you want to use, again, that's up to you. Some people want to use a 20-day as their short one and a 200-day as their long one, or some people want to use a 10-day and a 50-day. So we'll talk more about that, Carolyn.
Sounds good. Then the next one, the next kind of indicators are Bollinger Band. We have mentioned Bollinger Band is also often used by some traders because it provides you this range, and within the range, it is telling you how to trade, because when the MA is moving, the upper yellow and the lower blue are the sort of the standard deviations from that center line. So this is, Aaron, if you could maybe help us unpack in this example what NVIDIA price is approaching.
Yeah, so we're looking at NVIDIA's chart here. There's 3 different lines, right? You have your yellow one up top, the pink one in the middle, and the blue one on the bottom. The pink one in the middle, that's the basic moving average, or maybe the MACD, but your Bollinger Bands in this scenario are the yellow one up top is your upper Bollinger Band, your blue one on the bottom is the lower. As you can see with that candlestick right there with where the rectangle is, the NVIDIA's price got all the way down to the lower Bollinger Band, but then bounced from there, showing once it gets down to the lower Bollinger Band, that's where you want to buy. And then vice versa, if you look back left on the chart a little bit, right when the stock got above the yellow line, above the upper one, it came back down from there. So like you said, Carolyn, exactly right. The Bollinger Bands gives you somewhat of a range. And anytime you hit the bottom of that range, the stock should come up. And anytime you hit the top of that range, the stock should come down.
Great. And there's some pro tips as well with regards to MA, right?
Yeah, the moving averages will, and this is, like I said, the 2 most popular combinations are the 5 and 20 day or the 10 and 50 day. But I know some traders, Carolyn, that actually use a 200-day moving average. They look at what's been the price action over the last, that's almost 2 years, because that's almost a year, the 200-day moving average. Because if you think about it, we only have so many trading days in a year, right? The market's not open on weekends, so 200 trading days makes up almost a whole year's worth of the stock market.
Right, and that's what you oftentimes see, the 52-week high, 52-week low. Only knowing the high or low is definitely not as informative as looking at the moving average for the 200 trading days. Right, it has a lot more context to just the high or the low.
Exactly.
Yeah, and there are also, this we just addressed when the market was moving higher or lower. This is a lot of traders are momentum traders. That's where they trade. But there are also times when the market is sort of trendless or moving sideways, and this is when oscillators become useful. But how do you spot the oscillators? Is what the next 2 kinds of indicators are going to help you with.
Yeah, and this is really timely right now because, Carolyn, we've seen the markets be very choppy in the past couple of weeks. So when there's not a big established trend, you want to be able to work with these oscillators and know, okay, how are these stocks bouncing? How are these going up and down? So let's get into it.
Yeah, let's get into it. Should I reveal this is one of your favorites?
Yeah, I mentioned this to Carolyn yesterday when we were talking about the topics. The RSI, the Relative Strength Index, is one of my favorites because I typically, whenever I'm looking at a chart, I have the RSI on the bottom, like you can see here. And everyone has different metrics. So, right, the RSI is just indicating is it being bought? Is it overbought or is it oversold? And when an RSI gets too high, that means that it's overbought. The stock has been overextended. When the RSI is high, that's when you want to sell the stock. When the RSI is low, that's when you want to buy it. So kind of when all the sentiment is, oh, everyone's like selling the stock and the stock's way oversold, that's when the RSI will dip below 30. And that's when, so some people consider below 30 oversold. Some people have different metrics. Some people say, I only consider a stock oversold if it gets below 20. That's like more on the extreme scale. So some people say 80 on the high end is their metric for overbought, 20 on the low end is their metric for oversold, but 70-30 is kind of the consensus. So yeah, I mean, it's using RSI to try to figure out, is this stock, is it time to buy or is it time to sell, essentially?
Yeah, thanks for that. The next one is the MACD, not McDonald, of course, but the MACD is also a very popular technical indicator. So how should we kind of unpack the MACD concept?
Yeah, so MACD, it's actually somewhat similar to RSI. It gives you an idea of if a stock is in a bullish or bearish trend. But what's interesting here is, Carolyn, is you can use the MACD to really gauge momentum. You can say, okay, but how bullish is this or how bearish is this? And that's where you'll see on the bottom there, where we can see the MACD in times where it gets really high, it correlates with the stock rising really high, and vice versa. When the MACD goes lower, you can see that reflected in the dips on the chart. So it's based on the moving average, as it says here, and it's considered a reliable indicator of whether an overbought or oversold trend is becoming stronger or weaker. So you can actually see the same trends that you see in RSI, but just gauging how strong those trends are.
Great. This is super helpful. I think one of the things that's hard when it comes to technical analysis is the fact that there is a lot of information, and it is easy for some to become either analysis paralysis or just be so overwhelmed we don't know where to begin. So for someone to, now that we all have gone through these patterns, to practice, what is maybe a good way, Aaron, if you look back for yourself getting started as a technical trader, what are some tips for new technical traders?
So I would start because whenever you're talking about technical analysis, and this goes with Jonathan's question in the chat, he's asking if it works better on a 1 or 3 or 5 minute chart. You have different time frames available. If you're just getting started in technical analysis, I would encourage you to start on a longer time frame, right? Start trying to identify trends on stocks over like a year period. You'll be able to see how was Apple or Tesla stock trending this past year. And once you get good at that, it will allow you then to get better at identifying trends on a shorter time frame to see, okay, what is this stock doing within a month? And then you can say, okay, what is this stock doing within a week? And then once you start mastering those longer time frames, then you're ready to get into, okay, how's this chart doing today? And then you can get into those quicker day trades.
That is super helpful. So that's actually a wrap of our webinar content today. Thank you guys so much. And I mean, thank you, Aaron, really. I know you are pressed for time today.
Oh, no, thank you, Carolyn. I always enjoy, and I'll just say this, going off that last pro tip about starting with longer time frames and then working your way to the shorter ones. I also mentioned this to you, Caroline, is everyone has different technical indicators they use. Like Carolyn mentioned, the RSI is one of my favorites. You don't need, we covered like 8 different indicators today: the MACD, the moving averages, the RSI. You don't need to use every single one, right? If you find a system where you're using 1 or 2, a lot of times that's enough, right? A lot of times a simpler strategy is more repeatable and easier to master than trying to use 10 different indicators. So just try to learn all the different indicators and then learn how you can incorporate them into your trading and maybe which ones make the most sense for you. You can pick and choose the ones that make the most sense for you.
Yeah, that makes sense. Start small and, try using those indicators and see and test yourself and see if your prediction did come out. Also, as we had covered in the prior webinar, when how to manage your trading emotions, it may be useful to also think about how to set your loss parameters so that, whichever pot of money that you are spending on testing out this new trading skill set is not going to be the amount of money that you need for daily expenses, etc. So it really has to be sort of no strings attached investment money in that sense as well. So test small, try. I should also mention that we actually have a paper trading capability. So try maybe in the paper trading functionality before diving in with the real hard-earned cash.
I love it. That's a great idea.
Yeah. Obviously, before I forget, there is one thing now that you all today have a leg up, because very soon we're going to announce April Financial Literacy event. We are going to have a little bit challenging quiz that if you can complete a quiz, and if you feel, Moomoo is of value to you, you would like to deposit some money in Moomoo, you will immediately get a free Apple stock as well when your deposit exceeds $5,000. So
wow.
This is, I know, it's crazy.
Free Apple stock. I want some free Apple stock.
It is pretty crazy. It comes out to be a 3% yield right on the spot. So for
That's
traders
awesome.
and investors, yeah, definitely take advantage of this, and really take advantage of this course. The webinar itself, where we are covering some of that. If you did want to have a leg up, use the free training courses in the Moomoo app, and I think we'll see. Maybe you get to master some of these new skills faster than I do. So really, really encourage you all to follow our Twitter handle and be on the lookout for the announcement for this promotion.
Awesome. Yeah.
Awesome. I'll check with my host and confirming if we have questions that we should answer as well. New accounts only or for everyone? Good question, Justin. This promotion is for everyone. Even if you're an existing Moomoo account owner, you can still also earn that Apple. So go ahead and deposit that $5,000 to unlock your free Apple stock.
Awesome. All right, Carolyn, well, I got to run, but I was glad to be here with everyone today. If anyone's got any questions, you're more than welcome to follow me on Twitter. I'll drop that in the chat at Aaron Bry 5. Carolyn, always a pleasure to be with you. Looking forward to the next webinar.
Yeah, thank you so much, Aaron. Thank you for coming. And we really appreciate our partnership with Benzinga. I think traders, we make sure we consume the right information. Moomoo and Benzinga both have the same mission. We really want to make sure you all master the sport with all the necessary knowledge and the information at your fingertips.
Yep. And I should say, I'm looking forward to the next webinar. That's if you'll have me. I don't know if I'll be invited back, but I hope so. All right, guys, always a pleasure. Enjoy the rest of your day. Stay green and happy trading.
Thank you. All right. We're at the wrap. Thank you guys all so much. Stay tuned for the playback link and the webinar slides. I saw a lot of you guys would love to see the slides. Tell your friends and come and join us in the Moomoo community. We have a very lively community. Folks are chit-chatting all day long. So may the force be with you. May you all reign the market and make a profit.